mute this now. All right, I'm on. What's up, everybody? Mario, Yaya, give me a screen check. I'm good, right? Let me load this. I got sounds coming from all over the place. Gotta get rid of some of these coffees before I wear them. Where am I gonna put this? All right, you got some earnings out. I don't know if anybody cares about any of these names. Rivian. I think I heard a big revenue beat on that Rivian. What was the other one? Oh, the Celsius, right? You guys, it's down. Why is this thing still making noise? Okay. We're good. Thank you. All right. I'll try to we'll keep the back and forth to a minimum because of the delay. You got to be in a special kind of mood to deal with this delay on here to conversate for us to coagulate. So again, just because of where we're at, we discussed the last couple of weeks how it was just going to be a really tricky time and confusing time signal wise for the stuff we pay attention to in regards to flow, order flow, because of earnings season, because of OPEX, monthly OPEX. So you got a really tough couple of weeks with earnings into OPEX week. Next week, we've run out of excuses. You do have NVIDIA earnings, but honestly, that ties into a lot of the AI pocket. But I don't think as much of an emphasis. I could be wrong, but as much of an impact on the rest of the market. Don't get me wrong. You have still some hot pockets of AI, but what I'm getting at is there's a route this market can take where they could continue to rotate and rotate even more aggressively than we've seen, especially of late. Okay. A negative reaction to NVIDIA could be a potential catalyst for that. A lot of times, players need to see some things that have been working, not working anymore before they decide to look elsewhere, right? So anyway, that could be my glass half full approach as far as that's concerned. But I think what I'm getting at here and explaining to you guys is we had a lot of the order flow, especially we've had excuses for the past 3 weeks. Any good looking flow, there was always something, or they're reporting, this one's reporting. This week you have OPEX week. You guys know how that rolls. You got Fed exposure and all these names. And we're coming out of a period now where the same names, the same recycled names continue to see the action, right? All the action, all the aggressive flow has remained in the Palantirs. I've got Peloton on my mind. The PLTRs of the world, the Teslas of the world. A lot of retail and trader favorite type names. That's where all the focus has been, right? And when all the focus is there, all the action is there. That's not an ideal time because we're likely not seeing any new buying right? And any fresh names. And that usually resolves, it doesn't last forever, I guess is the best way to put it. You usually get some sort of resolution coming out of that period, okay? Either via a little rinse or correction in the market or aggressive rotation elsewhere, right? And I think we've been close anyway, but we're at the crossroads or really close to the crossroads where something like that has to happen. Now, what's really interesting is that retail, the big buyers of this market, okay, and when sweepers are running dry, that usually means the pro side of the positioning aspect of things, right? Long only funds, hedge funds. When sweepers are running dry, that's usually a sign that the pros are not active, right? There's not that much of a risk appetite out there. And that's, I think, one of the beauties of the flow, right? It's an early indication of that. So we saw kind of flow dry up in any fresh names. And you look over the last few weeks, the sole buyer of this market has been retail and buybacks. Okay? That's who's been buying every dip, right? A lot of the pros have pushed to the sideline, especially out of the hedge fund crowd. But retail obviously has been really aggressive into these pullbacks. Why is that interesting? And sentiment wise, it's not always a glaring sell signal when retail is active, okay? Because very similar situations. And I saw some people on social media pointing out the opposite of what I'm about to tell you. But I've seen, again, this is just my eyeball test, not back testing anything, but the COVID rally was a great example where retail was quite active, okay? The rally off the COVID lows. And a lot of the pro side of the pro community, hedge funds and that sort of thing, they really never believed in the rally the whole way up, right? But at the same time, you had retail locked in their houses because of COVID, putting all their money in Robinhood accounts, right? There were no ball games to bet on, no nothing. And they were really excited about stocks and options. And we kind of blew up, right? That's where this retail frenzy took off. That lasted for a good amount of time. Hedge funds really didn't take the bait into believing that COVID rally for quite a while retail remained bullish. Why am I telling you guys that? Because we have a similar situation here. Right? So it's not always a topping signal when retail is euphoric if other aspects, right, the other facets of positioning are on the complete opposite side of the coin. It's when they all line up on one side of the boat that creates a big problem. Okay? And we don't have that. But what we do face, and Goldman has pointed this out nicely over the past couple of days, Goldman traders more so than the research department, but with retail being the big buyer and a lot of these retail favorite names, trading names, continue to remain the most active, we're running into a period of time as we approach and get into March where retail activities kind of dries up for a period of time. And because you're going into tax season. And we're starting to see some signs of that already. Okay? So the interesting question that we face in this market is if retail, right, and buybacks were pretty much the buyers of every dip here, if retail is going to run dry for a period of time, what's this market look like at that point? Okay? I'm hoping it translates into some sort of rotation elsewhere, right? What we may see is a continuation of what we've been seeing the last couple of days. Although these red hot names really start to see some volatility, right? That's probably the most likely scenario to play out here with retail drying up a bit. But if we don't see any buying anywhere else or coming from anywhere else, The markets are likely going to face a little bit of pressure. Right? How much pressure? Who the hell knows? But probably we would expect chop, right? A really choppy type, rangy type market at the least, if we're not seeing rotation elsewhere. There's been this gradual rotation that's been occurring, and a lot of people are picking it up. You're hearing a lot of people start to talk about the market broadening out, and that's been a continuation from, I think, going back to last summer, right? You started to see software names get involved, the financials really got involved, and things like that. But what I'm hoping we start to see is some new names, new setups, new subsectors emerge to kind of either one, deal through the chop that we may see in the price action, or keep the markets bid and continue higher. And the beauty of that, I think, is that if we do see that, it's not like that's going to create some euphoric sentiment and positioning out there, right? It has the opposite effect. What really has an impact on sentiments and positioning is when these crowded names continue to go higher and get even more crowded, right? That's what really has an impact on sentiment. So I guess to sum it up, I think we're at an interesting time here at the same time as we're going to have some clarity from flow, which I think is really, really important. Okay. So I wanted to start off with that because I think that's the most important thing. And let me see, do I have anything from Goldman here? Yeah, here that I could point out. I don't know if you guys can make this out, but this is from Tactical Flow of Funds, a great note at a Goldman. Retail demand starting to fade. It's time to pay taxes in March, and showing how some of these numbers are starting to lighten up, these buy-in balances and stuff like that. Okay, we're at an interesting time of the year just in general because a lot of the bullish side of the equation in regards to flows that we were anticipating going into the start of this year start to fade. Okay. And, with a lot of crowding out there, I think it adds an interesting dynamic to the market. I still think there are plenty of areas out there where money can rotate into. We kind of been seeing a rolling correction, and I think we're seeing a little bit of an unwind of that already. Like, look at some of these areas, right? Like healthcare. Okay, now these are more defensive. Let me take some of this mess off. What else I got to take off here? Let me take that off. Okay. Right, so healthcare, again, while the market was making new highs and just made a new high, healthcare was in correction. We looked at all these things, right? The sectors already had corrected while the market remained bid. So the possibility of us seeing a more aggressive rotation into some of these areas is certainly possible. For me personally, and I think a lot of you guys would agree, there's nothing better than aggressive rotation into names, okay? Because it really doesn't matter what sectors of the market, right? A lot of times we don't even pay attention to the indexes and what the indexes are doing when individual names are being aggressively bought. So that's the best case scenario. And, it's okay if it's tech. Again, you have AI. By far, it's the catalyst out there. And what's propelled this market and held this market higher is gradual at times, but spreading out, right? This AI theme starting to spread out into other areas and the market benefiting off of that, right? Whether it's from power utility names, we've seen, a couple months of the Bitcoin miners really get bought up. Software names which were really underowned. So again, these are things, rather than predict how this may turn out, I think that's the best approach to take, is to just take a step back, as I did anyhow, into this earnings season. We get through OPEX and now see what the action looks like. Okay. what the action has looked like up to this point, there's nothing really to take away. It's been the same song and dance every day. Same song and dance every day. All right. But again, there are signs that it may be starting to clear up. Here's a few things I wanted to share with you guys. These are the top bets out of from today, and this pretty much gives you a good picture of what we've been seeing. Okay, the most aggressive buying that has occurred in individual names has not been in U.S. stocks. Right, these China-related issues have really caught fire, and that's where there's been some really aggressive buying. The obvious, the BABA, right? But I think even a better sign is some of the underbelly names we talked about from a GDS, which continues to catch flow even today into the strength. You know, these things were shot out of a cannon here off this action. VNet, okay? Again, I'm no big China fan. You guys know that. I'm not really to stick out my neck and put on a basket of China issues. That's the last thing I want to do. But I wouldn't mind, finding an under the radar AI China related play like this. Okay. So you can see a little bit of what we saw today. Both names still have earnings to report, but some of the best looking action out there was named by Momo. You guys may know this from some of the China rallies of the past. They report March 12th. Caught some nice looking July buying. Okay. You got earnings in the way here. I think it's a week away, early March. But I'm just giving you guys an idea of what type of names have been seeing the flow up to this point. Another name they really came after over the past week and change is this Tuya. Okay. Again, they got earnings coming up here. But caught really aggressive action. I think it was July call a week ago, right back again today, and this thing ripped. Okay, so I would definitely keep. I think this is the most, for me anyway. This is the most promising thing to come out of this China rally, unlike the China rallies of the past. Okay, the China rallies that we asked basically was a handful of the usuals. Right? They buy Baba, they buy Billy, they buy Tiger because it's a brokerage name, and Futu, Futu, and they just keep hitting those names over and over and over and over again until the momentum stops. Here, it's had a different wrinkle. In my opinion, my two favorite names off the flow, GDS and VNet, are new names. Are new names. So we can certainly see a continuation of that. I don't know, again, how big of a fan you guys are of playing overseas names, but that's where the majority of the aggressive buying has showed up over the last couple of weeks. All right. What else is interesting to keep an eye on as we get out of OPEX week, even more importantly, some of these analog semiconductor names, cyclical semiconductor names are starting to get attention. Okay, now these are the chip stocks that, if you remember, we've talked about in the past that really didn't have that AI fire to them. Some of them ended up playing a part eventually, like an LRCX, but the Texas Instruments of the world, the ADI, what was it, a microchip. This week, they started to buy that basket. Okay. LRCX was the best of the action in that group. The most aggressive activity in LRCX was a day before Investor Day. I don't know what day that was. Tuesday, maybe. Right? They really came after February 28th calls. And from that day on, we saw a nice May sweep yesterday, and June calls today saw a real nice appetite. The issue with the flow in these names is that they have Feb exposure, right? So if you pull up LRCX and you look at the top OI positions, there are a couple of Feb positions there that are set to expire tomorrow. So the problem, again, for those of you who aren't aware, we see that a lot during the week of OPEX, where a lot of names that have open interest for that month will see size action. and where it may look like new buying, all it is replacing some of the exposure that's going to expire. All right. So LRCX caught a little bit of both, caught a little bit of that shorter term momentum type action and some good looking quality sweeper activity. I would definitely keep an eye on this as we get through past this week into next week, off any weakness and buying into weakness, right? Some of the others, here was one MCHP. This hasn't been a good performer at all. Caught some action yesterday, right? And like this is why, like especially MHP, maybe LRCX is a little different, right? Because LRCX is a stud. It's just been out of favor. This MCHP has really had a tough time. I didn't participate in really the AI run up when the semiconductors were hot. Just been a sluggish name, tough name to own. We haven't seen action in this name. I don't remember in how long. And then, this week it happens to see some decent looking flow, decent size. And, it's no coincidence that when you pull up open interest, there's some Fed exposure there, right? So to confirm that potentially there's new institutional buying coming into this name, we want to see a continuation of that as we get past this week, right? So rather than me even listing all these names, any of these cyclical, any of the names not named NVIDIA, Avgo, right, that have been littered and crowded for ages, I think all are worth keeping an eye on for buying as we get through into next week. Okay, so we did see an uptick in that camp this week. What else we got here? And then you got names like here's another name you guys would find interesting, COHR. Same thing there, repeat name. We've seen buying in this name. Drunken Miller had a position. I think he chiseled some of that off. This is technically, quote unquote, repeat activity. Could roll Feb exposure. So you probably want to keep an eye on once we get past this week, especially if they start hitting it again. Okay, now that you've had some consolidation. Some people in the steam room like the name enough that because there's been a breather, they're willing to shoot here, right? There's no problem with that. I think it's a good-looking enough name and has seen good-looking enough action. But if you're trading off the flow itself, I think you want to see that buying confirmed once we get through this week. Okay, but the best action we saw was May calls on pretty decent size. Today was a little more short-term, March 90s. All right, and they could even be playing just a bounce here. We've seen bounces within this consolidation. All right, and what else we got today? Anything else today? Oh, and this names like this are seeing some action. Isolated, just selective names. Fox. Now, this is not really my cup of tea, but you got a name that's really, really strong, as you can see, and they came in today for April calls. I have no idea why. I don't know if there's a catalyst here or what. This was some of the buying we saw. April 60s. Okay. So, again, it's OPEX week, so that's why I try not to get too excited. But if we continue to see this type of activity show up, I don't mind it. I don't mind it. Even if the market is dull or blah, even if some of these overheated names need to chop around for a while and digest. My concern, my worry is that once we get through Feb OPEX, some of these names that are seeing decent size, they're not going to see that type of buying, right? Because it's more rolling than any fresh buying coming in. That's my concern, right? And if that's the case, that could be a troubling sign for the overall market if risk appetite is just not there. Right? And let me just, again, because people extrapolate sometimes when I say things like that into we've topped out and a crash is coming. Okay? The reason I make a remark like that is when you're seeing a lack of buying show up in the flow, right? A lack of appetite, as I like to put it, right? You're just not seeing that interest show up on the buy side. Okay, it doesn't always mean that the market has to tumble to the downside, but what it means a lot of the times is that the upside reward, that part of the equation, is just not there, right? So what I found throughout my years of trading off this and following this stuff is when I'm seeing a lack of risk appetite, it's like I'm hanging around in names and hoping to stay break even, right? Hoping they hang in there while waiting for that risk appetite to show up. So now, I'm not getting that reward side of the equation, and there's still that risk side of the equation that we do pull back and come in, right? So that's kind of how I look at it, right? Now, some of you may want to start piecing into certain names, and you're okay with sitting around while names do nothing while you're in them. Okay? If you're in shorter term options, that's probably not the best approach to take. But if you're in longer term leaps or something like that, you don't mind that. But for me, I've always found that I fare best when that risk appetite's out there because I know the momentum is here now, right? Rather than me try to predict when it may show up. That's where I can run into some trouble. Okay, so that's where I think the risk appetite out of the type of sweeper activity we look for, it does a really good job in as an indicator for us. All right, so what we've been seeing, like the same recycled names, really seeing most of the pace, most of the appetite out there, that's where all the momentum is. All right, the problem with those names, a lot of them have gone parabolic. All right, so you don't want to hang around there. Okay, but if we start seeing that appetite show up, even if it's selectively, right, in isolated names, that's fine, right? That's fine. But we want to see that show up. We definitely want to see it show up. A lack of that, potentially could be concerning, right? And yeah, I see somebody, Zyro mentioned Intel. Like, I'll give you an example, right? This week, okay, the whole week, the only thing that resembled that type of appetite, okay, that I'm explaining to you, and now just so you guys who are new, so you understand, the appetite is, think of it as momentum. Okay, for me, day trading, I solely day trade off aggressive activity. Okay, so no matter what the name is, if they come in aggressively sweeping up calls, okay, my goal is to get in the middle of it and make some money off that momentum, right? So not only on a swing trade basis, that's primarily what I look for intraday for day trading purposes, okay? It's been so thin out there. It's been so light as far as the aggressive buying is concerned, especially in anything new, that I haven't even been able to find many names to day trade, let alone swing trade. Okay, but somebody just mentioned Intel. Okay, last week, outside again, you had China. We're talking U.S. stocks now. Intel was the only real aggressive activity we've seen all week. The only one, right? And again, it looked different, right? You saw that demand there, right? They really came after those calls. There was some decent momentum there for at least a few days, even if you were just looking to trade it tactically. So that's, if you guys were around to see the action in Intel, that's what I'm talking about. That type of buying where they feel like they can't get enough, whether it's weeklies or whether they're bombing size in strike 6 months out, right? To me, it doesn't matter because either I'm going to day trade it or I'm going to look to swing trade it if it's more of quality. But that's the aggressive type of appetite I want to see. Okay, so excluding China names, you had Intel solely last week, and this week, I think the only one that you can make an argument for was LRCX, and it was those February 28th calls ahead of the investor day, right? That was the only name they really look like they had a real interest in. Okay. So I'm just giving you guys an example, especially for those of you in the Steam room. Whether you're trading the names or not, I think it's worth paying attention to because it could give you a good indication of the overall momentum in the market. Right? If there's small pocket of momentum, in all likelihood, the upside of the equation is not going to be there. Doesn't mean the downside has to be vicious, but the upside's not worth it. All right. So anybody, well, I don't want to go back and forth. If you have any questions, shoot them out there. I'll take a glance rather than go back and forth in conversations. Just going over some of the big picture stuff, really no big changes, right? So we talked about you got a tug of war, in the overall market, which has resulted in a slow grind in the indexes to new highs, right? So really up or down in the indexes is irrelevant to me, because anything can happen depending on those names that make up a big part of the indexes. What we're seeing out there, and it's pretty obvious in the price action, you got a tug of war between retail traders who have been really excited, especially in certain pockets and specific names, right? They've been buying every little dip. And you got the professional side, right? Specifically hedge funds who have been completely opposite. They are anything but excited. Okay, and this is what they look like right now. You take out China, you take China out of the equation, and they probably have added shorts over the last couple of weeks. All right, the bulk of their buying probably has been in China-related names. But hedge funds still net slightly short. Okay, not at any major extreme, but you can see how blah it's been. All right. So you got hedge funds disinterested. You got retail traders that are trading a lot of the same names. They've been euphoric. You got retail investors, which show up in the AAII sentiment. They aren't bullish. They're a little bit nervous, not to any extreme, but I'm sure you guys have seen some of the readings, AAII. With a market at new highs, you've had more bulls than bears show up in some of those readings. Okay. And then you got on the pro side, you got the systematic funds. Think of CTAs, vol control funds, that they're just trading off levels. So they've been adding exposure. Okay. That's the tug of war. I know you guys are probably, some of you are confused about what I just said, but you should be confused. Okay. That's the kind of tug of war we've been facing in positioning. All right. So right now we go into next week with systematic funds pretty much with a full tank of gas as far as exposure is concerned. They're about as long as they're going to get. All right. You have retail traders quite bullish, right? And they're expected to slow down. So you got the two sides of the bullish equation that have been buying. You got anticipation of them slowing down. What do the others do? What does the pro side do, right? What do hedge funds do? I think in that ultimately we'll see the resolution of that in the market. So that's kind of where we stick. What else did I want to show you guys? Oh, here's CTAs, by the way. While I pull this up. And these are credit spreads. And again, they're singing the same tune we've been talking about. Basically, more of a choppier, grindier, not a full-fledged risk-on type market is what credit spreads have been showing. And I'll show you in a second if I can refresh here. Come on. All right, so I inverted this indicator so you guys can see the correlation with the market. All right, so you see the little divergence. All right, this here, okay, this indicator down here, this shot out of a cannon started before the election. That's full-fledged risk on. Okay, that's find something, buy it, grip it, and hang on. All right, that's in all likelihood, if it caught sweeper activity, 4 out of 5 names you're probably going to make money. All right, you're talking about solid breath. You're talking again risk on. That's my definition of risk on. Okay, what we've been facing here more recent, right? And you can see how this has started to diverge as we gotten into this year, right? This shot out of a cannon, this a lot choppier, right? As the market makes a new high, this thing is nowhere near making a new high. Okay, what this tells us is kind of what we're seeing in the market right now. Okay, more of a rotation, more of chop. All right. So ultimately, the takeaway from this signal usually is if you find, again, this is my interpretation, if there's aggressive buying in certain pockets or certain sectors of the market, it's worth getting involved in because there's likely rotation taking place. Okay. But if there's not, you run the risk of a little bit of a rinse in the indexes and it catching up. Example was here. Okay. There was a couple examples, right? But here's one here. This is back here. Market higher, credit spreads widening out a bit, right? And then you get the market pulling back, chopping around, and then boom, led to that after the election. We had another one here too, right? This kind of tops out, market continues higher, and then you get a little dippity doo-dah in the market here with this, catches up, and kind of lines up again. All right. So the credit signals showing the same thing, more of a choppier rotation type market. Okay. If we saw now, somebody made a good point to me recently. I think I told you guys about it. What happened that was different in the 2000 bubble when that blew? Credit spreads, and I think it was credit spreads, were aggressively diverging long before the market topped out in March of 2000. So you had this going south in a meaningful way while the market was still making highs into March of 2000. You don't have that now. You get these slight divergences here. You don't have any major divergence here. All right, so that ultimately would be a caution flag, right? If you see spreads and swaps start to widen out and the market acting like nothing's going on, it may be an early sign, okay? Doesn't mean you're going to nail the top right there and then. Like I said, 2000 was an earlier sign, but that is a red flag right there that we could be at the last of it. All right, so again, big picture signals, I don't see anything flashing any major concern out there yet. All right, they're not all necessarily predictive. It's more of a real-time gauge of what we're seeing right now in the credit markets. But as of right now, there's not really much of concern. And I think that's it, guys. Sharpies. I know you guys are interested in Sharpies. Here are Sharpies. And again, here is where you can see they started to get a little toward into the end of the year. They started to get a little aggressive there, slapping on hedges. They kind of unwound that, and they've just been hanging around. Now, they remain hedged, okay, but that's not out of the ordinary, okay? This was out of the ordinary when they had no hedges on as the market was continuing higher. commercial hedgers are supposed to be hedged when prices appreciate. All right, so this is normal. And for a bullish signal out of this, we need the market to rinse and this something like this to happen. All right, when they take off their hedges and they get long. But as of right now, it's tough, to make a call off this per se, because they're hedged. So if the market pulls back now, you can say, "Oh, they're right, they were hedged." But I've seen them hedged. I gave you an example in 2021. Right, Sharpies were hedged into the end of the summer. That's when I was in all cash for overnight positions, and the market rallied all the way until what? The beginning of the year, right? So figure, let's say August, September, October, November, December, the market went higher while Sharpies were hedged. And then we had the bear market, right? Oh, here, you can see here. Right? So you see what they did here, right? As the market continued higher, they continued to slap on hedges. And then into the summer of 2022, that's when they kind of stepped on the gas, getting long. So, I see some questions here. Let's see what how far we think the China trade could go. Pablo, the tough part about China and making a prediction, okay, is this: you rely on that government, okay, and the problem is once they got involved, once they put their hand in the cookie jar back and got involved in China tech and all that stuff, sucked out all the momentum. Now you got economic issues there, major economic issues there. Investors want to see major stimulus, right? And they're not willing to do it. They've shown they're not willing to do it. So the problem is anything they walk back on the stimulus side could weigh on the China indexes, the markets. And that's what we've seen, like here. So you had these periods of excitement, right? You've had these periods of excitement here, but what happens is, you hear something coming from the China government and reeling it back, and you get these air pockets where they suck everybody out. What if I was to bet? I think we see more of kind of what we've been seeing, a choppier, up and down type where you can say this, right? You end up making the case that you got some sort of uptrend that's been forming, higher lows, right? But, if you're chasing this, that's going to sting, right? So you would look to buy pullbacks. Here's what I would say, though, what my interest in China, okay? Because I'm not even going to pretend to try to predict the China markets. What I'm interested in is AI underbelly names out of China. Does that make sense? Okay, I'm interested in this. Okay, in this. That's the only thing really I'm interested in all due honesty. Because I think what you're at a point now where a lot of these tech names in relation to AI, U.S. tech names, even overseas Europe tech names, they've run up so much, they're so crowded, right? They're expensive that there's a lot more risk in these things, right? So until you see some digestion or a pullback in a lot of these things, they don't become interesting. The difference out of China is they've been ignored this whole time. Nobody had any interest in anything Chinese. Okay? So now what I'm seeing in the flow is I'm seeing a focus on stock picking in these type of names. They're not buying names that are benefiting off the China economy turning around. They're looking for sleeper China AI tech related names. Make sense? Right? So I really don't know what these Chinese stocks are going to do. As of right now, I think they're worthy to look at off pullbacks. I bought a little, as you guys know, the CHAU that I'm in. People in the room have traded yin, the levered one, YINN. I would be really careful chasing rallies. I'd be really careful chasing rallies. All right, but if we do see a name like a GDS tomorrow, see initial activity, I think it's worth a shot. Because you can see the excitement there. You can see the bid there. So I think the opportunity is there. China tech / AI specifically, rather than the overall markets. And what could easily happen is the markets in China can at times be really sluggish and dead. And still that pocket, that underbelly AI pocket, those names continue to rip. We've seen that sweet spot in this market, right? Like this. Right? This is what's happened to U.S. AI underbelly names, right? This is what happened. So none of that has happened in China yet. We're just starting to see signs of it now. So that's what I'm most interested in. So many folks tweeting about getting stopped out of multiple positions today. If you had high beta tech names, you got wrecked today. Yeah, that's the tough part, DS. I think they just don't take into account. Now, newer traders, DS, they don't focus on that, right? They look at what they're making money today, everything's beautiful, and they don't realize that if you get caught with a basket of calls, you can give it back so quick you won't know what hit you. And especially when you got names like this, like these names didn't even pull back yet. This is nothing. Look at the run this thing has had, right? Like these things are insane. So now, if you're buying these things and you continue to buy them up here, and you do get caught even in just consolidation, you're gonna lose that money. You're gonna lose that money. So hopefully they locked in a decent amount of profit where they have more profit than what they get back. But a lot of them don't really look at it until it's too late. But yeah, that's the problem with these things. And there's no, there's no handicapping it. You don't know when these rinses are going to show up. And there's no way to avoid them if you're buying these extended names. So, I mean, like I tell you guys, if you're in a PLTR, which many of you are from lower levels, leave it alone, right? Be a lot looser with a stop, of course. It's fine sitting through digestion. You're totally fine with that, right? You're fine sitting through a pullback if you got a nice entry. But the point we were making here for week in, week out is chasing these names, new money, new risk up here. It's a real dangerous game. I don't care if this thing was up another 30 today. It doesn't change that. So yeah, it doesn't shock me, DS, that they got wrecked in these things off one day of selling. One day. Yin, that's when I day traded yin. The one I should have bought yin is what I'm trying to get out of my mouth. I should have bought yin when I bought Chow. There really wasn't any logic either. They bought yin leaps and then they bought Chow Mei calls and leaps. And I bought the Chow. I don't know. I should have bought the yin. But I like to I day trade yin here and there. Like, in other words, if sweepers are playing Chinese names and I like to spot rather than try to pick which Chinese name I'm going to play, I like to day trade yin. Not often, but on occasion. But yeah, this is the levered bull ETF to play on China. Right? And you guys know this is the tech ETF, KWEB, no leverage there. But if you kind of, if you're looking to play more and catch the AI theme more than the overall economic theme, macro theme in China, KWEB would be the way to go. But if you're bullish on China, you go FXI and you go ASHR. At least that's, the ones I know. All right. What about before we wrap it up, I always like to hear from you guys. Any names that has any new names that's piquing anybody's interest out there? Anything got anybody excited? Because that's been my problem, as I've shared with you guys. There's been nothing that has excited me out there, right? There's nothing new that gets me excited. That's kind of been the problem. So I'm hoping that starts to change it. But anything out there piquing your interest? Melly, well, you had earnings today, right? How'd that fare? And listen, like for me, you don't need me or anybody else to tell you something about Melly that you probably don't know already. The stock's a beast. The stock's a beast. It's a beast. Now, again, there'll be a quarter where they miss earnings, or maybe it's priced in and they sell it off, and those have been great buying opportunities. This is what is it out of Argentina or Brazil? But Melly's a stud. Melly's well known. It's also $2,100 a share. So if you're playing it, calls. The calls are pretty pricey, and I don't know how far out you're going. You're probably just looking to trade it. I don't know. That's not really my game. That's not really my game. Melly doesn't catch much flow either. Once in a blue moon. VG made it back to green today. Yeah, that was one of the some of the newer action we saw. VG, this is an LNG play. They have earnings coming up, so heads up on that. I don't know, again, if it matters. It may be a good thing they have earnings because it looks like they have some decent numbers, right? But that's kind of the issue there is you have earnings there. So just be aware of that. But yeah, they caught those initiation buy recommendations the day after some action, and it caught some nice looking March flow, right? And the problem is it catches earnings. Otherwise, looks pretty good. Yeah, Ali, this is interesting. This is underbelly. I would like to say underbelly financials. So this is a part of the market that really hasn't hatched yet. Is the best way to put it. Okay, like you've had financials. Okay, it's amazing. Like the circle's still on there. The financials were the most shorted sector on the board at the start of last year, 2024. The most shorted sector. Okay? And fast forward to where we are now, they've ramped up exposure in the financials. Now, what's interesting is what they've been buying is primarily the big financials that we all know about. Goldman, JP Morgan, all the big guys predominantly. They haven't really spilled aggressively into the underbelly, the regional banks and stuff like that. So that could still come here. That could still come. And that's where a name like this would benefit. Now, the difference is a Goldman can move, JP Morgan can move. These type of names, it's almost like at a methodical pace, right? You can't even look at them every day. You buy them, it looks like they're chopping around, and then 3-4 months later, you're like, oh shit, that's a nice profit. It's that type of trade there, right? It's slower, slower. Now, some of them can get hot, and the whole group can get hot at times, but they're less likely to have the type of momentum the big guys have. Yeah, that's kind of what we're seeing here. All right, that's kind of what we're seeing here. So this wouldn't shock me if the next time we look at this is breaking out to new highs. That wouldn't shock me. You know, there's been other good-looking financials too. Capital One, we've seen a lot of buying in. COF, same thing there. You had this breakout, right? So the financials look great. The financials look great. I just think they've come a long way, and even though I wouldn't say they're crowded right now, on a shorter term basis, they are, if that makes any sense. Right? Like, let me see, maybe they put it in better wording. Here. Funds have increased their weight in financials in the fourth quarter, most of any sector. Now, that just the fourth quarter. You understand? Big picture wise, they were really underweight financials. So they made up a lot of that. And on a shorter term basis, they can. I wouldn't be shocked if he had some sort of suggestion or correction or anything like that. Yeah, I mean, SoFi has been great, right? Look at it. It's been great. Yeah, for SoFi, this is what, a triple? So, now you're getting a little chopping around here. I think that's totally normal. That's totally normal. But can be a slow mover at times. I tried trading SoFi a couple of times. Oh my God, frustrating. Just, because it would catch nice looking action. It wouldn't move. Obviously when I'm not in it, it moves. Right? Because like here, when it ripped like this, I wasn't in it. But everywhere else, they would buy it. It wore me out. It wore me out. Ed has always has interesting news. Yeah, Pony. Somebody else was talking to me about that. So this is a China AI name, right? What I was explaining to you guys earlier. This is what I mean. Right? This is what I mean. Like, I think these type of names, especially names that people aren't aware about. God forbid you see sweeper activity. And like what we saw, this GDS, and this is a name, believe it or not, that some funds have positions in. So this is not as under the radar as you would think. A few hedge funds like this thing. But there was good looking buying in this thing. Really good looking buying. So, once you start to get institutional eyeballs on these things, it doesn't take long, for these things to explode. So yeah, this Pony is that type of name. I don't know anything about the company, but I'm saying that's that type of name. And that's what I'm interested in, these type of names out of China. More than like, again, anything that is betting on improvement in the overall economy there. Or tariffs. You got a lot of shit going on there. And whoever was asking me about China, if you're not in yet, I would wait, because more than likely you're going to get some sort of tariff news or something that they sell it off. People are going to hate China again, and that's where you look to buy if you like it. If you're bullish, I think that's where the opportunity is there of selling. So this Pony, Ed, and you always bring some interesting names to the table. This Pony, definitely, we were looking at the other day. Definitely. VTR, what is that? I'm not familiar with that. Oh, look at this. Is this a financial? Wow. Let's see, what do they do here? This is ownership of senior housing and healthcare. That's what I thought. I remember this name from back in the day. I think this is a REIT. This is not a REIT. I thought this was a REIT. I think this might be a REIT, or maybe they changed it. Senior living REIT, I think. But looks good. I'm sure you're getting a dividend too here, right? Let's see. How did it go? Yeah, a little bit. Well, it has gone up in price too, so that's why. But you're getting almost, you got a little over 2.5%. Yeah, looks good. Looks good. ACHR. Oh yeah, Archer. This this is where kind of right, like these are the recycled names I'm talking about. I made money with Archer. I liked Archer. It caught really aggressive action. Archer and Joby. Okay, both of them. I played them both. The problem is here, like you've had these big runs here. You understand? You've had these major runs, a lot more retail involvement, and now it's probably going to be a lot sloppier. And this is what I'm trying to explain. This. Okay? So you get more of that sloppy price action, and the risk is their fundamentals. You understand? These names have no fundamentals. They're all story. So you could get a hit piece out on from some short blog. You can get, off earnings, debacle. Who knows? So for me, that's kind of what I was explaining earlier. On a risk reward basis, right now, some of these older names, they just don't look interesting to me. Archer could end up being a $30 stock one day. I have no idea. I know nothing about their business and their story. All I know is this, right? When we first started to see that aggressive sweeper activity show up, it was coming into this move here, right? Now you get this move where the stock triples, and you're likely going to find some digestion here. It may be lengthy digestion. Who knows how long it goes? Who knows how long it goes? So, what I like to do to stay out of trouble and to avoid that risk is look for, okay, what's the next Archer type name that they potentially come after? Right? So instead of going back to an Archer, which I owned at 5 and sold at 8, and then it went to 12, rather than buy Archer at 10, I want to see a new name off initial activity be bought. Does that make sense? So, like I said earlier, if you're in Archer from down here when it was catching action and we were talking about it, and you're holding it, I'm not have any rebuttal for that. But I'm talking about starting a position in Archer at 10 after the stock just more than tripled off. I'm not taking a second. $100,000 in revenue. $100,000 in sales they did for the quarter. Right? They're losing all sorts of money. And we know this. I mean, flying taxis, they're not here yet. Or whatever they do. It's a future story. Here's an example. Okay? And you guys remember this conversation because there were a couple of trolls that I would get into little arguments over. But Remember these guys? Right? And you remember the conversation we were having with these guys at the time? Okay? Rigetti, seeing action here. Plenty of you guys owned Rigetti. I didn't even own it down there. I never owned Rigetti. Okay? You guys actually bought and sold it, so even more you guys were aware of. But the stock went from $1 and change to $22. All right? You can't be looking to buy this thing at $16 off that run, putting new risk there. It doesn't make sense. No matter what, even if you thought it was going to 40, for me, it doesn't make sense. Okay, because Rigetti, when it was catching action and you guys started to play it off the flow, nobody was aware of it. Nobody really knew about it. A few people might have, but very little. When the stock broke $15, everybody and their mother's mother wanted to buy Rigetti. Okay? And again, it doesn't mean that this stock is going to go to zero, bankrupt, and stay there forever. I'm sure quantum plays will have their day again. Okay? But the likely scenario is this. This is what I was explaining. Right? In all actuality, it looks fine. I mean, the stock went from $1 to over 20, and now, has been chopping around here, wide range, and has digested the move. But if you bought it up at 17, 18, 19, 20, where a lot of people were buying it, you're down 50%. Right? All those names. So that's the problem, right? Coming in after a move like this. Now, when I take it to a whole other extreme, okay? And I think that's one of my big faults. But like an RGTI is not even on my radar anymore, okay? Like I get the question, well, where would I become interested in RGTI again? Off of flow, okay? And the truth of the matter is, I'm not interested. I'm not looking for it. Now, what I would do is if RGTI catches action here, I would day trade it, or even hold it for a day, look to flip it. But that's the extent of it. Okay. Once it does this, I need a lengthy consolidation where the flow goes dead and people lose total interest for me to become interested again. Only because the egg hatched. It hatched and then some. And like, this is a name, right? You guys know this name. We've talked about it numerous times. It's the same thing over and over again, okay? Here's where soon caught initial activity, all right? Where a lot of us initially played soon with the first action. Here. The stock went from $1 and change to 5. Okay? And people were buying it at 5 after that move, thinking blah, 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 right? Then you had this kind of looks like Archer Rigetti a little bit, right? Look how long this went on for. Okay? Oh, break it out. Nope. Like, look at this menagerie. Okay? And I'm not saying these quantum names need to do this again, right? Because this was an extreme, but look how long this went on for. Okay? Now, once you go through this whole process, okay, you stop seeing flow in it. Nobody's talking about soon anymore. Nobody cares. Right? People have given up on it. Now you start to see sweeper activity show up in an aggressive way, buying it again. Now you have an entry. Right? The flow's been dead. There's no buyers in it anymore. Maybe some put buyers. No interest. Now all of a sudden, aggressive buying shows up. That's your signal. Okay? But it did the same thing again here. Look at this. Same exact thing. Okay? Even bigger move. Went to 10. Same thing. Right? People chasing it at 9, 10 the next day. NVIDIA bought a stake. No, it's different this time. Nvidia bought a stake in them. What happened after that? Look at this. Same thing. All right? Look how long. Look at this. Torture. And it happens again. As you guys remember. Right? Boom. Same thing. And what happens? Right? So that's the risk of chasing eggs that already hatched. There is the rare occasion where a name like an APP, okay? But here's what I found the difference is a lot of times. The names like APP, they have the numbers. They have the fundamentals. They have the real growth. It's not just story. You understand? So what happens is every time an APP would go into digestion, it reports a bang out quarter, profitable quarter, right? Now all of a sudden it went from just a momentum name, retail name. Now institutions have an interest in it, right? So you get these exaggerated moves almost always off profitability or that explosive growth to profitability. So that's why I think almost always when you catch one of these plays and they have the numbers, it's always worth leaving a piece behind. Always. Always. But, the names with zero revenue, listen, I'm not saying you don't leave it, you can leave it behind. It's a lotto ticket. But the biggest winners usually come from where the fundamentals are behind it. So that's my long explanation to whoever asked me about Archer. I just here again. It's off my radar. It's off my radar. Hold on, I can't see the rest of that chat. Let me go there. Hated those cars. Now soy boys are hot too. Which one? Which cars are you talking about? Oh, it's probably one of the names I was looking at. APP sounds bogus. Only has 20 job openings. Some point will pop. Well, yeah. Again, APP now is old news. I'm just making the point here, right? APP when it started to catch action was all the way back there, but this ridiculous move has had fundamentals behind it. You understand? It's not just story. There's real numbers and real growth. Like look, $1 billion for the quarter in revenue. These quantum names or Archer, they do nothing in revenue. Nothing. Right? And here's a good example of that, right? PLTR. Okay? PLTR has had that story for a long time. And retail has loved the name throughout. In my opinion, now you could say AI is a big component, a big catalyst, no doubt. But in my opinion, the reason the stock has been this strong was that story now has come to fruition. You're starting to see it, right? They've become profitable now. That's where the stock really started to catch wind behind it. So, but up here, Tyler, and again, I do it to a fault though, Tyler. When they get bubblicious like this, they're off my radar. There are people in the steam room trading like Lucci, PLTR all day long. He's cracking jokes at me. I forgot what PLTR did yesterday. I was asking him, was it up? Was it down? He was like, you don't know PLTR was down? These names are off my radar when they do this. You know what I mean? Off of what I use, I have no edge off in these guys anymore. You guys have heard me say that. sweeper activity plays a small role when names go like this. Right? I mean, you already won. Put a check mark next to it if you're using sweepers as an indicator. And yeah, like PLTR here, I have no idea. I'm sure that they're not going to make it easy for shorts, right? You probably get a rip back. Like here's the example I give you, okay? Here's SMCI. And this is another name that had, well, I don't know, they cooked the books, but they supposedly had real fundamentals behind it, right? SMCI, you get this parabolic move, okay? This looks like a topping bar to me right here, right? Reversal kind of looks like PLTR a little. Look what it did. You try to short it, bink, another new high. Oh boy, forget about it. Now it's going to 300, right? Then another sell off. You come in to try to short it there, bink, they squeeze it right back in your face. Okay? Now, this is already in the midst out. You ever hear the term topping is usually a process? Right? Not always, but a lot of the times it is. They never make it easy for shorts. We all know, like this name, you see the pink bars was out of control and couldn't sustain this type of upside move. It would be some sort of correction. But they don't let you get, for whatever reason, this market doesn't like to pay bears. Just the market gods don't like bears. Okay? So look at this whole thing here. Look at this. If you were going long or shorting, it was a complete menagerie, this stock. What side you were on. As a bull or bear. Look at what you had to deal with here. All right? So that's what I'm saying. When they get up in this neck of the woods, it's off my radar. I have no interest. It's too difficult for me. I have no interest in this name anymore. All right? Like, look at what this did. Look at this. Talk about wearing both sides out. And then ultimately, it bases out. And then when they cooked the books and they found that out, that's when the bottom fell out of it. All right? But look at this whole process. So, again, like PLTR, that hymns. Yeah, I get it. This is where all the excitement's at. As an active trader, if you got conviction and faith on your trader skills, which I'm not embarrassed to admit, I don't have a lot of faith in my emotional trading skills. Okay, if you do, these are the names you want to play, right? You got movements, both directions. You play both sides, yo-yo, as I like to call it. I can't do that shit. I can't do that shit. I can't be long and then be short the same stock I was long 5 minutes ago. I can't do it. I'm just not wired that way. I'd be an emotional wreck. You know, but that's the type of player that plays these names now, right? You don't have an edge off sweeper activity. You don't have an edge off underexposed positioning in these things anymore. These things are on a completely different planet, right? What we want the next hymns, right? We want to find the next name that's being aggressively bought that the street is not fully involved in yet. That's generally what we're looking for. And it's worth being patient, especially if you're trading your own book. You know, I get it. When you're managing money, you have to find something to do. But if you're trading your own account, I mean, that's one of the luxuries you have, is to be patient and wait for your type of setup or your signals to fire. You got no one to answer to. So yeah, I don't take it the wrong way when I brush you guys off. Whoever asks about these type of names, they're not on my radar anymore. I don't have anything to share about these names with you guys anymore. All I can tell you is that, again, I wouldn't buy them up here. If you own them cheaper, you like the company, hold it. But other than that, I have no effing clue. Yeah, I traded that NMMD, and I'd even make I took a scratch on this trade. Um, but again, I played it off that spec action that came in before RFK, and sold it. I missed the first pop and just got out of it a little. I think call it break even. I didn't even make any money. I don't think. But I'm not in this thing. It didn't catch that type of action. They were cheap spec sweeps. Like even this one too, I traded. This one I made decent money with. Lays. This one I bought here and got out into that pop. Again, these are the older type names. I'm strictly trading these names. There's nothing new. Otherwise, I would share with you guys. There's no new name seeing new aggressive action that's getting me excited out there. Okay, like I said, the last impressive action was probably Intel, which I played. I traded Intel. LRCX I didn't play. So this MNMD was cheap spec action though, which is okay. I mean, there's nothing wrong, right? Like this Lays, I made almost $1 on a $3 stock. I'll take that every day. I don't mind trading it. Especially those spots like this. Like you see what I like here? Okay, big run up, worry up everyone, death, and then right here there was some spec action with an appetite. Cheap action, cheap buying, but it looked like somebody was making a play on it. So I'm looking just to get in the way of it. That's it. Pop the buck, call it a day, and move on. So that's kind of what's up, Sahil? We need some catalyst to get risk on again, but I think dead money right now -1. Yeah. Sahil, I don't know if you saw that Goldman though. Interesting about retail in general, who's been behind a lot of the buying out there. And one more point I want to make, and I think I made this point. I know STEAMROOM members mostly know, but maybe anybody who's new, but you guys on this webinar especially. Like people think when you're looking at the flow, anything that's seeing volume is interesting. Okay? You got to understand, especially now where retail is active, the last thing that I want to put any serious money behind is something that's being bought aggressively by retail. You understand? When there is a large amount of volume in whatever it may be, again, AMC, for example, AMC weeklies, okay? And it's not made up from the type of buying that I like to see, right? And it's most likely retail buying. Just because the volume is big doesn't mean that I have an edge. I want to make a play on it. That's actually the complete opposite of what I want to make a play on. And the reason I say that is because over the last couple of weeks, as I've been pointing out that there really hasn't been much risk appetite from the type of crowd that we follow in the STEAMROOM, I hear, well, what about this name? Did you see how much action is there today? How about this name? Did you see? Yeah, I mean, I've been telling you guys for the past 3 weeks, retail, as far as options are concerned, they're euphoric. There's been a lot of retail activity in the options market. That doesn't mean I want to be a part of it. That's the last crowd I want to follow. In all actuality, I want to get in before retail gets in and hopefully sell it into their push. So there's a big difference between unusual cumulative volume in a name and aggressive sweeper activity that's likely coming from an institution or a fund. Right? Night and day. Now, we've been seeing a lot of retail activity in many different things. From the names that are in parabolic mode that we've talked about to, a name like Grab or whatever, But that's not what I'm looking for. That's not what I'm looking for. And I just want to make that point because, a few people have pointed out that, because I mentioned that there's no risk appetite out there, and they're pointing out unusual volume in certain names. Think about it logically, right? I mean, if we're going to look at a put to call indicator or some of the indicators we look at in the option market in a contrarian way, why would I want to follow big volume from that same crowd in the name? Right? A lot of times when you see that, it rubs me the wrong way. Like if I like a name and there's retail participation as well, I'm more likely to sell the name if I had intentions of holding it. So, but we've been seeing a lot of retail activity out there, as I've been showing you guys some of the numbers. And the point I was making is like, now you're going into tax season. You have heavy retail participation. Usually tax season, you see that drop off in a meaningful way. And it'll be interesting to see what the overall action, especially in a lot of those names, look like. Yeah, that's what I was just saying out there. There's some flow out there, but there's just nothing that gets you. There's nothing that gets me really excited. There's nothing that gets me excited. Like there's excuses behind a lot of the flow out there. There's excuses. I like the type of aggressive buying in a name. Like a lot of times, I don't even know what the name does. I don't know what they do. Their business. Like I don't even care. That's the best action for me. But again, it doesn't last forever. So we had a tricky period. We had earnings season, and then it runs into monthly OPEX, which is always a pain in the ass. We got one more thing, NVIDIA earnings to deal with, but I don't think it's going to be as messy as we've seen. But just another thing to take into consideration. So I think we're at an interesting pivot spot here in regards to the market. We certainly could see more of the same, but I think there's a better chance of something different happening, either bullish or bearish, quite soon. You also, as you get through this week, Gamma has been elevated, right? Strong has been a bid in the market. It, as always the case, after OPEX, that comes off, loosens things up. As McElliott likes to say, what does he say? You're free to move around the cabin now. So it loosens things up. So I think we're going to start to see a different wrinkle regardless. And, that's going to mean opportunity for something for somebody. Rotation, little correction. And honestly, right now, I'm in a pretty large cash position. I really don't mind any of those scenarios playing out. Like, the only thing that I wouldn't like is they come back into the same handful of names, right? These parabolic names, and that's it. Like, that would be the worst case scenario. But anything other than that, regardless of what the indexes do, I think is going to be a lot better than what we've been dealing with. SPX 6100 going to be really important. On SPX, right? Yeah, I mean, there's nothing. Again, nothing looks bad about this market, again, I can't find anything too negative about it. The only thing is the crowding out there. But the market seems to take care of that each and every time. You get outliers, right? You get that one or two names that continue to go higher and get the oohs and ahs. But for the most part, when a pocket gets overheated and you start to get a little concerned, the market just rinses it. The market rinses it. Whether it's the index is coming down for a few days a week, or the market just focusing on that sector, like you had that little quantum thing going on, they rinsed that. It's done a great job of that. So I'm looking forward to the start of next week and getting out of this little lull we've been in flow-wise. And again, even if we see more of the same, where they're just selectively finding names, as long as we don't have the excuses, right? Like the few names that they found either had earnings, or this week you have Fed expert OPEX rolls, right? That goes away for a lot of stuff starting next week. All right? So if they come in and they start aggressively buying an LRCX type name, that's totally fine, regardless of what the indexes decide to do, chop around or whatever it may be. But we want to see that appetite. I can't stress it enough. The appetite's so important. That's the conviction, Unbelievable. Insiders continue to buy it up here, see you? I saw that. I can't believe this. Look at this stock. What a great stock this is. So you had insider buying here, right? And now insider buying it again here. Look at this. What the hell? Yeah, nuts, right? You rarely see that. Right? Every other name that looks like this is seeing insider selling like crazy. Any name. Give me a name. APP, like crazy. PLTR, selling like it's got the plague. Any other name. Give me a name that looks like this. Insiders are dumping the living daylights out of it. They're buying this TKO up here. What the fuck? You rarely see that. But this company is no joke, This company is no joke. F1. Oh, I know that one. F1. I know that one. Yeah. Unbelievable. Crazy. And then the what is it? The Fannie Mae. We just saw a sweeper activity in a financial. Was it Fannie Mae? It was something like that, right? It's one of these type names. I don't remember the symbol, but it's been another good stock like that. BE, then again, falls into that category of that group of older names. BE, the Oklos of the world, VST, of course. Again, didn't have the move that some of the others did, but I'm looking more for fresher names here. And if you're in it, and I'm not talking about anything like that, BE can be a sleeper longer term. I doubt it. It's in the right group, obviously. But as far as a play here, I personally would, I don't even know. I'd probably be lying to you. But I was going to say, I need to see more digestion here before I would get interest off flow. Like we're still seeing flow, but we're seeing rolling. We're seeing rolling predominantly, and that's the problem. Because again, it's a name that's hatched. And again, that's some of the others too, which I know you guys like a lot. They just again they hatched. I don't know. They're just off my radar. And this is what I was trying to explain to you guys. It's going at the least a lot of times just tougher. It's going to be tougher. Rips are good. You see this, and even like a lot of us, you were part of it, and you think you're going to see something like that again, and it just runs into more selling. Was it FICO? No, was it? What's Fannie Mae symbol? I think it was. Could it be Fannie Mae? No, it wasn't Fannie Mae though. I would remember. It was one of those unusual financial plays. Never see a sweep. Newmont making a nice comeback, huh? These gold miners are tough too, though. I was part lucky with the gold miners. I was in the middle of this. I mean, Jesus. But what I should have held the gold. That's what I should have held. Look at this. Unbelievable. Yeah. That's it. What is that? FNMA? Was that it? I think that was it. Let me see. Oh, no, maybe not. But this is pretty crazy too, right? This is cheaper. No, the stock I'm thinking about, I think is like $100. Kind of like the FWONK. It looks like that. But it's not that important. I can't remember it. Something similar to that. Yeah, the gold miners are tough. But they look good. All right? They got some momentum back. But look at gold. Still the best way to go. Look at this, right? Nice rip. As healthy as digestion you're going to get. Look at this for how many years? From 2020 to 20. That's some lengthy digestion. And then the big breakout. Bink. This was the play. Right, so there's an example too, right? Like, it doesn't have to be risk on market to find a pocket of aggressive buying. It could show up anywhere. Like gold was an opportunity here, right? The miners were an opportunity there. You had the Bitcoin miners, you had the space stocks, you have the power spec names. You don't need the indexes when you're seeing that type of buying show up. That's the beauty of it. Because it's signaling out, it's pointing out momentum in that particular area. Who cares? It's almost better if the overall market's kind of choppy. Sally Mae, no. But it's that type of name. I got everybody guessing. Now you guys are torturing me here. Let me see. I'm going to check Twitter if I tweeted it out. 1 second. I might have tweeted out that it was seeing flow. I think it was yesterday. Let me see. Give me 1 second because you guys are torturing me now. Comcast, no. It's like a Comcast type symbol. Damn it. I didn't tweet it out. Oh, I got it. I did tweet it out. FCNCA. There it is. Yep. Oh my God, it's 2,000. Would I say 200? It's $2,000 a share. Look at this thing. Insane. Look at these numbers. Look at this. First Citizen Bank. a sweeper bought the dip yesterday or a couple of days ago, but they have Feb exposure, so in all likelihood, it's just replacing that. That's why I didn't mention the name. Yeah, that's why I didn't mention the name. Anybody know, Sahil? Do you know any potential catalysts for this? Anybody know that of something that could be a catalyst for them buying this thing up here? Well, they bought it. Well, 2 months. April's they bought. At any other point, I may not even bring it up, but because of how awful the flow has been, definitely caught my attention. They bought April 60s. There was like maybe 5, 6 sweeps. These are just two. Not huge money, but there was an appetite there. I think it traded about 8,000 contracts. Right? This is Fox Media, is it? Yeah, maybe. I was looking too. Overall, their numbers, the growth is not really there, but their numbers aren't that bad. And the stock's obviously doing something right. Look at this. Right? Compared to some of the others? Like, look at this. And there's been a little buying there too. No way, Stavros. From Greece. I'm Greek. Nice. Wow. So you live in Athens? I got family in Athens. Look at that. We got Greece in the house. Crazy. No, what? There's nothing we can do about the delay. The delay sucks. It feels like honestly, it feels like a 5 minute delay. Papu. We got a member of the Steam Room. His name is Yaya. Yaya. I call him Grandma. Ah, it's a YouTube thing, Mario. Yeah, that's the only that's why I haven't been getting involved in too much of the back and forth. Because by the time I respond to one guy, it's like old news. But welcome, Salvador. All right, guys. I'm about to wrap it up. Anybody? What is this? Fox buys. Oh, wait. VS posted something in the room here. Hold on. This was news just now. Fox buys. Red Sea Ventures was back. Oh, wow. Wait, this was overnight? Oh, I thought I heard something about this too. I saw it on Twitter. Papu! That's great. Yeah. So I don't know. Keep an eye on the Fox A if anybody's in it. Again, it's run so much. That's the only problem. That's great. Oh, VS is saying it's a couple weeks old. Oh, so maybe that. So VX is pointing out maybe this thing kicked it in its rear end. Jesus is Greek. Christos. Christos Anesti. Very nice. Yeah, definitely welcome. And yeah, on Thursday, I'm sure you probably watched it on recording. But good to see a fellow Greek, especially from Greece. Very nice. All right, my friends. I'll leave you to your evening. Again, tomorrow, OPEX, likely going to be quite messy. But again, I'm looking forward more to next week. I know probably a lot of you are with NVIDIA, but that's the last thing I'm excited about. But we're starting to see a little bit of, starting to see signs of some clarity. Hopefully, it's the start of something. But I do think we are at the crossroads or close to of a different look out of this market, and that will be welcomed. Yeah. So heal everybody, Steam Room guys. I'll see you mañana. To the rest of you, I'll see you guys next week. Stavro, enjoy the night or the morning. Stavro, what time is it now over there? It's in the middle of the morning. Oh no, it's late night. Late night. Kalinita. I'll see you guys later. Have a good night, everybody.